Howdy out there, folks. This is Darius Dale here to present our macro minute for Thursday, February 3rd, 2022. Starting with markets this morning, we have stocks down, commodities down, crypto down, dollar up, global bond yields up. Big movers this morning, we have the NASDAQ 100 and Ethereum both off around 2% apiece. Nat Gas giving up yesterday's gains at down minus 6%. From an economic data standpoint, January global services PMI data confirm Omicron's impact was worse for the services sector in terms of the damage it's doing to global GDP. And let us not forget that services account for roughly two-thirds of global GDP versus roughly a third for manufacturing, agriculture combined. So on the accelerating front, we have Korea, Ireland, Russia, Germany, and the UK ticked up in the month of January. No countries were unchanged thus far. And then decelerating, Australia, Japan, India, Spain, Italy, France, and the Eurozone, not necessarily just the total number of countries that were decelerating, but we saw some pretty sharp slowdowns on the 3 to 4 to 5 to 10 point range for each of these countries. So clearly, again, Omicron having some impact. What that ultimately means, however, is that the post Omicron bounce in global growth will have an outsized impact on growth that will likely flatter Q2 GDP statistics, just in terms of the technical dynamics, in terms of the weak handoff, and then the sort of strong finish to the Q1. They will definitely flatter Q2 GDP statistics, but very similar to the interquarter bounce we talked about going back to the second quarter of 2020. It's most of the positive delta is likely to be realized here in Q1, so that should very much keep the Fed on its track to begin normalizing monetary policy starting in March. Just taking it to the chart here, this is something we've called out for the U.S. economy. I think it's a similar dynamic going on with the global economy with respect to the balance of risk for global growth expectations is skewed to the downside, not to the upside, meaning that there's a lot of room, there's an air pocket between where current consensus expectations are for growth. This is global GDP. Looking at 4.2%, or Bloomberg consensus is calling for 4.2% global GDP here in Q2. That's at 310 basis points north of the 5-year trend line through 2019. The global economy just hasn't grown that fast in recent years, really since the post GFC era, with the global dollar shortage sort of crimping credit growth internationally. So something's got to change in a big way for us to hit that growth target. But we would argue, in the context of not only the Fed tightening, you got the UK central bank tightening as well, BOE hiking interest rates as well. There's going to be a lot of global monetary and fiscal tightening this year that really brings us, it calls into question such elevated growth forecasts for the global economy. And so we would expect at some point this year, we're likely to have a growth scare as the speed of the repricing of those expectations picks up sometime either in the spring or the summertime. So stay tuned for that. With respect to our probable range process, nothing overbought or oversold in our global macro risk matrix. S&P 500 still bearish VAMs minus 9% of downside versus 1.4% of upside. WTI still neutral VAMs minus 7% of downside versus 5% of upside. Bloomberg Dollar Index minus 0.6% of downside versus 1.3% of upside. Still bullish VAMs there. 10-year Treasury yields also bullish VAMs minus 7 basis points of downside versus 21 basis points of upside. Bitcoin, Ethereum, both still bearish VAMs minus 17% of downside versus 8% of upside for Bitcoin, minus 28% of downside versus 8% of upside for Ethereum. Good sales yesterday, or good process call outs yesterday in terms of those approaching their upper boundary of their probable range. And then lastly, gold, neutral VAM still minus 1% of downside versus 3% of upside. So with that, Darius Dale presenting our macro minute for Thursday, February 3rd, 2022. Best of luck out there.